Hey guys, welcome back to the channel. Today we're talking about how is cryptocurrency taxed in the UK. That is, how is Bitcoin and other cryptocurrencies taxed right here in the UK. Now this is a new phenomenon and quite a complex subject, to be fair, because the tax system has only just sort of caught up with taxing cryptocurrencies as both an investment and as a source of income from mining or investing in crypto wallets and crypto exchanges. If that sounds like something you're interested in today, please smash that like button and consider subscribing to my channel, and we'll get in there and I'll explain exactly how you get taxed on cryptocurrency in the UK and if there is any way of avoiding paying this tax. Hey guys, welcome into the video. So as mentioned, today we're talking about how is cryptocurrency and Bitcoin taxed right here in the UK. So crypto assets are a relatively new type of asset. They've only come to the fore in the last couple of years, and this paper was released on the 20th of December 2019, and it defines the UK government and HMRC's policy towards crypto and crypto assets. So their definitions are cryptocurrency that is transferred, stored or traded electronically, and they've identified three types of crypto assets: exchange tokens, utility tokens and security tokens. Exchange tokens are intended to be used as a method of payment, such as Bitcoin. Utility tokens are tokens that the holder has to give access to particular goods or services, and security tokens are tokens that provide the holder with particular interests in a business, for example the nature of debt due on that business and a share of the profits. So what taxes apply? Well, it depends on what sort of token you have and what sort of currency you have. Largely it is going to be capital gains tax that applies when you dispose of crypto assets, especially if they've gone up significantly in value, as has happened with Bitcoin over the last couple of years or so. So this is quite a good overview of what is going on here. Income tax will apply if you get paid in Bitcoin, so there's no way of avoiding tax by having your income put into cryptocurrency or Bitcoin, because you will still owe the same tax as if it was your personal allowance. There is no way of getting around it. Even if you use mining to generate some cryptocurrency, you are still supposed to pay tax on that side of things as a business. And if you incur fees from mining, then of course you can deduct that from the tax that you would of course pay. So capital gains tax is the main tax you will pay, and you'll get a threshold of £12,300 in gains. If you get anything over that and you're selling your cryptocurrency and disposing of it, then you will pay tax if you pay over that certain amount. Now, to check if you need to pay tax on crypto assets and cryptocurrency, you can simply hop on to the government's website and check. So capital gains tax might be due if you sell your tokens, exchange your tokens for a different type of crypto asset. That you need to be careful with if you're switching between Bitcoin and Ethereum, for example, and use your tokens to pay for goods or services, or transferring from one to another. Working out how much you need to pay can be done via calculators, but essentially it is the same thing. Treat it as just another investment. Make over 12,300, guess what? You have to pay tax on it, unfortunately. There are some allowable expenses in there for the transaction fees, for example, or advertising as a buyer or seller, or drawing up the transaction. So you'll be able to deduct the costs of buying and selling, or the app fees that have been in process for you while you've been building your investment. You'll have to fill in self-assessment tax to pay your capital gains tax, and you'll have to have a government UTR number and a government UTR account to do that. Now we're going to go through this UK cryptocurrency guide on Coin Tracker, and this has been put together by Shandan Lodha and Shahan Chandaraskara CPA. Sorry if I've massacred their names there, I'm not meaning to do that. And this is a 15-minute little read. The government is coming down on crypto because they're seeing it as a significant revenue stream for HM Revenue and Customs, so they're obviously going to crack down on it. People have made an absolute fortune out of it. People have turned £100 into thousands of pounds, so the government is obviously going to want its fair share. So they're putting in place the regular tax rules just like they would with any other investment. As we've seen, exchange tokens, utility tokens and security tokens. There's some simple HMRC rules on taxation there. Cryptocurrency is a personal investment and subject to capital gains tax rules. You can't hold cryptocurrency like Bitcoin in an ISA at the moment. If you trade cryptocurrency as a business activity, you will still be subject to income tax rules. Now, the allowances for the capital gains side of things is 12,300, and you can see the history going back here, but it is currently 12,300. So in these examples that we see here, if you purchase one Bitcoin way back when for £100 and then you sell it for 10 grand, there is no tax to pay at the moment because you haven't crossed that threshold. However, if you bought that same Bitcoin for £100 and you sold it for £20,000, then your capital gain is 19,900 and your tax would be paid on the amount past £12,300. And then the last example is if you got 10,000 Bitcoin for 80 grand and gift them to your husband, and then you sell 5 Bitcoin for 50 grand, capital gains are 20,000 but split across 2 individuals, so would be below the 12,000 threshold per person, so therefore no capital gains tax is due. So you could be very careful and very clever there, and if you're going to dispose of an asset, dispose of it between 2 people, and that might reduce your tax bill. So there's share matching examples here as well, and then there's examples of the capital gains here, so number of disposals, proceeds, allowable costs, and then exactly how much you are expected to make. If you make any losses in crypto, then of course you're not going to pay tax on them, and you may be able to claim some of that loss back from a new tax bill. Forks are quite an interesting thing. You can gain extra money, which is a deviation from the original blockchain. If that happens and you gain extra money, then you may have to pay tax on that. Usually, by the look of it, it's not a major amount of money, so you won't have to pay too much anyway, because it's just essentially the remainder of a sum that the blockchain couldn't sort out. If you're a hobbyist miner and you have to report the fair market value of your coins that you received as miscellaneous income, you can offset this against your mining expenses, but you will be expected to pay capital gain tax on your mined coins when you have them. So for example, suppose you mined 1 Bitcoin in 2020. At the time you received this coin, it was worth 9,000. You would have to report the 9,000 as miscellaneous income. This also becomes the cost basis of this coin. If you were then to sell this coin later for £10,000, you'd have a capital gain of £1,000. Fortunately, in that circumstance, you still wouldn't have to pay any tax because you've only gained £1,000. But if you were to do that multiple times, for example, then capital gains tax would eventually be due, and that is worth bearing in mind. There are some airdrops as well. So airdrops occurs when you receive a free token in your wallet. Typically it occurs as part of a marketing or a referral campaign. Taxation of airdrops depends on your tax status, personal versus trader. If you're personal, you are passively involved in investing cryptocurrency, then the main source of income is taxed and not the profits made from cryptocurrency. You will still have to pay capital gains tax if you amass such an amount of these coins that this capital gains tax is then levied on the disposure of said coins. I know it gets a little bit complicated there, but you can see an example of this here as well. You can stack them up as well. However, according to HMRC's website, fees or rewards received in return for mining should be reported as trading income or miscellaneous income. So crypto donations are again a little bit dodgy, because it's unless the donation is tainted or the crypto is sold at a charity price, you have to be very careful, because charitable organisations are not subject to capital gains taxes. If your cryptocurrency is given to you as part of wages or earnings, then your usual, the money's worth at the time, will be subject to income tax, and usual personal allowance applies. So you have to be very careful with that one, guys. So guys, that is how cryptocurrency, the likes of Bitcoin and Ethereum, are taxed here in the UK, and a couple of ways to minimise the damage of a potential tax bill when disposing of crypto assets. Crypto is here to stay. Cryptocurrency is here to stay. It's going to form a larger part of our lives going forward. So it only makes sense that the government is going to start levying tax against it, as essentially as if it is another currency, because that is what it is. I've grown used to that idea, but there's going to be some people out there that are going to have some pretty hefty capital gains tax bills when they come to dispose of their asset, because of just what it is worth. It is major money now, guys, so you need to pay attention when disposing of cryptocurrency, because it could cost you pretty big in terms of a tax bill. Thank you very much for watching today, guys. Absolutely awesome to bring you this information. If you could smash that like button on your way out, that would be awesome, and I'll see you in another investing episode. Catch you later.